Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, we cover two particular stock, FCI, this is First Caribbean International, and NEL, who have had contrasting fortunes over the past year. But before I do, I take the opportunity to extend condolences to the family of the late former Prime Minister, Mr. Manning, and to Hazel Manning, his wife, and his children. We at Bourse extend condolences. Let's go now to what has been happening in the financial market. Very often we have said that the markets are down, the stock markets in Trinidad and Tobago are down. Indeed, that is the case. However, some stocks are performing well while others have been pulling down the composite index. Let's go now to our first graph where we speak about First Caribbean International. And in terms of our first graph, what you would see is that the company has performed very well over the past 2 years. From 2 years in 2013 and 14 being in negative territory in terms of profitability. What has happened in the first half of the year ended April 30th, 2016, FCI has reported earnings per share of 30 cents, or up 40.6% in TT dollar terms, which is very good movement. Revenues as well have been up, and the top line is moving. That's a very good thing. Loan quality has been improving significantly, where we've seen that the loan loss book has fallen considerably in the past year. You will see more of these details in our website at bourseinvestment.com, where you can look and see the greater details. But how has this company performed in terms of share price movement? Well, the good news is, as we look at our second graph, is that it is one of the better performers, up by some 40% in terms of valuation, starting the year at about $5 to $5.50 range, and is now up to $7. Contrast this with the other player that we are going to look at, which is NEL. When you look at the bottom right-hand side of your screen, NEL is down 33.6% in terms of share price for the year. So then we come back and we take a look at what else we need to pay attention to in terms of FCI. FCI does have good headroom for improved dividends. You will recall that they paid a special dividend last year. But there are other factors that recommend FCI. Let's look at our third graph, and you will see what I'm speaking to. On our third graph, you would see that the dividend payout ratio, which is a measure of the payout of dividends as a percentage of earnings, as a dividend yield as a percentage of price, 2.4. Compare that to the other players in the banking sector, where it's 3.6 in the case of Scotia and 4.1 in the case of Republic. So there is headroom in terms of the payment of the dividend yield, as well as in terms of the payout ratio, where you see that top line, that dotted line, showing you that the payout ratio is about 34% as opposed to other stock. So how do we rate and rank FCI? Well, we think that this stock, as I said, good factors going for it, not only dividend yield, but it pays its dividends in US dollars. Mark that against the fact that it is about 30% exposed to Barbados, significantly exposed to the Eastern Caribbean, and just about 5% exposed to Trinidad and Tobago. On this basis, we maintain a neutral for the stock, given all of these various factors. Turn now to NEL. What has been happening to NEL in the market? Well, declared earnings per share for the year of about 15 cents. But when you look at this graph on NEL, what it shows is that the share of profits of the various investee companies, which would include NGC LNG, NGC NGL, Tringen, the ammonia company, TSTT, and of course NFM. You can see how significant the shortfall in terms of earnings, in terms of the share of invested companies has been when you look at the bottom right of your screen, which is $65 million versus the previous year of $456 million. Notwithstanding this, as we come back, what we know is that the dividends paid out by NIL has been very resilient, and they continue to provide a fair amount of stability in terms of the dividend payment. So when you look at what's happening, when you go to your next graph, you will see that resilience in this fifth graph. Earnings, which is that yellow marker, has been volatile, as you can see across, but dividend continued to be paid at a reasonable high clip. On these various bases, we continue to hold NIL as a neutral at this point in time. Look for us on the newspapers for our report, as well as our mutual funds, the prices for our new mutual funds under Bourse and the Save Invest rubric. Have yourself a wonderful investment week. This is Subhash Ramkilawan for the Bourse Report.